Before moving on, micro venture capital firm Gemba Capital has announced the launch of its second fund with a corpus of 250 crore rupees, and that includes a green shoe option of 50 crores. The fund is going to invest in about 30 early stage businesses, and these will be across fintech, consumer tech and B2B platforms, with the first check of 5 crore rupees and about 30% reserve ratio for making follow-on investments. So for more on this, I am now joined by Adit Podar, General Partner at Gemba Capital. Adit, thanks very much for your time here on CNBC TV 18. Start by telling us about Gemba Capital. You backed about 120 founders across 50 plus startups. You describe Gemba as this thesis-led investor that writes low-friction collaborative checks. What exactly do you mean by that? What is the investment thesis?
Yeah, thank you so much for having me over. Gemba Capital was started in 2018, and we've been always investors in early stage startups, seed startups, and pre-seed startups, right? And we've invested in almost 50 companies till now, around 9 to 10 companies every year in certain sectors where we already have a thesis, where we understand those sectors, and that's why we call ourselves very thesis-focused, high-conviction bets is what we take. We do not do a lot of transactions. And that's where the low friction collaborative checks become very important, because we invest alongside other VCs, we invest alongside other lead investors, and the founders we're more founder friendly, wherein our check is more collaborative to the VC funds, and low friction checks for the founders.
Well, let's talk about this fund too that you've launched for 250 crores. Yeah. One, how soon do you plan to close it? Who are you raising this money from? And two, how soon will you start deploying this money?
We are expecting to close this by this year end. We are going to raise mostly from institutional LPs, offshore as well as domestic, as well as some family offices. And a certain part of it will be reserved for HNIs, CXOs, and founders. That would be the mix of fund two.
And how soon will you start investing this money?
We'll start deploying by Jan of next year. So early next year, we'll start deploying this capital.
Okay, sure. So you're looking to invest in about 30 early stage companies across these sectors you've outlined. Any names you can share in terms of who you've already outlined, what's in the pipeline, and what you really look for in these companies before you sign the check?
Sure. So the investments will start from Jan onwards. So the pipeline will get created from November to December onwards, because these are very, very early stage transactions which move very fast. But to give you a sense in what kind of companies will be investing in across these three sectors: fintech, consumer tech, and B2B platforms. And I can, maybe double click on each one of them. But, each of our transaction goes through evaluation phase. And if a company kind of passes through these evaluation parameters and phases, is then when the check is committed. To give you a brief idea, these are more or less 7 stages, wherein the first one is the founder. At our stage, it's very important to understand the founder market fit, which means whether this founder is the right founder for this kind of a business. By founder, I mean the founding team. And then we move to the market. Is this the right timing of the market? Is it the right size, the size of the market, the growth in the market, right? And then the third one is defensibility, moat, right? Is the product much defensible, 10x better than what is available in the market? Then we look at growth. Is there how fast the company has grown, the revenues have grown, or is there any early signs of customer love? And then we're talking about exits, right? What are the exit opportunities which we can get in a company like this? What's the risk we are taking? And what's finally the pricing, right? Is it priced correctly? So that is the entire process through which a company goes through, and then the investment is made. Yeah.
Since Adit, you brought up exits, let me ask you, from your first fund, I don't know if it's too early now perhaps, have you had any exits so far, and anything that's lined up in the near future?
Yeah, so we've got 3 exits, not from Fund 1, but Fund 1 is too early. Fund 1 is 2022 vintage, and we've just we invest very, very early, as I said. So we hold for 5 years, 6 years. But before that, whatever investments we've done, we've got 3 exits, 2 partial exits. This year, we're expecting 1 more exit. So exits will happen as the life cycle progresses of the fund, right? I also wanted to kind of bring one more point to your previous question about what kind of businesses wherein will the thesis for Fund 2 is to invest in platform first businesses. And I can probably double click on that as well in terms of what do we say, what do we mean when we say we want to invest in a platform first businesses across our focus sectors.
Well, unfortunately, we've run out of time, Adit, but it was a pleasure speaking with you, and thank you very much for being with us here today.
No problem. Thank you so much for having me. Thank you so much.
On that